I'm Suzanne Morgan with Southern Trust Mortgage. Our office is actually in Nexton, right on the square. So today we'll talk about understanding mortgages. I'm not really sure what everyone's knowledge base is as far as the mortgage process goes. However, I have been in your shoes. So just a little background on me. I had a real estate, well, I still have my real estate license, but I was a top producer for about 20 years. Decided, about 2015, my friend Beth Greenlee, who is our senior loan officer, she and I work as a team, brought me over to the dark side, we'll call it, just to help her out. And I was getting kind of burned out, so it was time to maybe try something different for a little while. And, I thought it would just be dip my toes in, let's see how this goes. But anyhow, we've been working great together since 2015. I'm still there, working as a loan officer and learning all I can about the mortgage business. So I say that to say this. I know the position that you're in, and sometimes it can be very frustrating to put the people in the car and drive them around, and you finally find, after all this time, the perfect house, you write the perfect contract, you get the perfect deal, and all of a sudden something goes south with the loan. So, I just want to be sure that we address any questions you have. If you've had any issues with anything, let's bring that up, and I guess just start the conversation with, what kinds of questions do you guys have for me? And then we'll build on kind of this discussion from there. Go.
One of my questions is, with COVID and everything that's going on, how is that affecting the time frame of getting loans processed and things through?
We are not having a huge issue with time right now. As far as purchase contracts goes, that is the focal point of our mortgage company. They're always going to put the purchase contracts ahead of any refinances. Obviously, there's a huge refinance boom. Everyone knows that because the rates are so low. So everyone's trying to get, out of their 4.875 or greater interest rate and down into the low threes or even lower, or even change their term to a 15-year versus a 30. So those kind of take a little bit of a back seat to our purchase contracts. Purchase contracts, we could easily get those done in a normal time frame, 30 days. We're getting them done sometimes less than that. But a lot of what we do is not in our control. So we're dealing with third-party companies. We have to wait on title to come in, and that has been somewhat of an issue sometimes because the title companies are backed up, the abstractors are backed up, the courthouses were closed. Stuff like that. So it's just waiting on third-party things to come in is probably our biggest struggle that we see. Our end of stuff can go smooth as silk, but unless we have title and appraisal and all of those things, obviously all of those third-party people are backed up with purchases and refinances right now. It's a boom, and that sometimes can hold us up, but we've not missed a closing date because of it, so we've been fortunate.
Oh, that's awesome.
Yeah, we've been very fortunate.
So with value increasing in this area as it has been consistently, what do you do so if someone wants to purchase, say a home that the property value isn't that high, but they pay more than what it is assessed for? Do they have to have the extra cash on top of that if they're purchasing something for a higher price than what it's appraised at?
They would, yes. So
Okay.
what happens typically in that case is, let's say buyer and seller agree to $200,000 on the house, and the house appraises at $190,000. That's all we can lend on is the $190,000.
Okay.
Now, that's not to say that we can't get the appraiser, if there is a legitimate reason to do a reconsideration of value. Let's say they pulled some comparables that maybe they pulled one that was out of the neighborhood. And you're like, well, now wait a minute, that one just closed down the street 4 days ago for this, and it would be a good comparable. Then we can't discuss it with them. However, you as agents can reach out to the appraiser and ask for a reconsideration of value. And you can send in your comparables. It's kind of like a stab in the heart for them because it means they, have to go back and redo their report, which is not a good reflection. But occasionally we can get that to happen. We have no part in that. We can't contact the appraisers in any way. But again, if there is an issue, we will try to work with the agents and the borrowers. If the borrower feels like they really want the property and they feel like the value is there, we will work. We have an appraisal team, so we have to go through them, and they will get with the appraiser to get in touch with you guys and work something out.
So in that situation, so say if it's, someone wants, it's a purchase price is $200,000, appraisal's $190,000, would they then have to give that cash to make up for?
Correct.
And then on top of the 20% down, was that?
Whatever their down payment is. On top of
Okay.
that, they will pay the difference of whatever the appraised value is versus what the sales price is, in the event that the seller will not come down. If the seller says, look, it's $200, take it or leave it.
Right.
Then they're going to have to come up with the difference between the appraised value and whatever the contract sales price is.
Okay. And do you always have to have 20% down?
No, you do not. There's several, so we'll talk for just a moment, and I had some handouts and I'll leave them here for everyone, but, and there's some little brochures as well. But I brought a little mortgage comparison sheet, so you have kind of an idea of the different kind of options that borrowers might have out there. And these are just some, there are more, but these are probably most of what you're going to deal with, probably 99% of the time. So FHA. FHA is usually going to be for, I'll say first-time home buyers, but sometimes we run into folks that might not be a first-time home buyer, but their credit score is not quite where it needs to be to get them a better rate in a conventional product. So we'll push them into the FHA product. We're always going to try to find the best scenario for them, but FHA requires a 3.5% down payment. They can have the seller pay closing costs. The seller can always pay closing costs. The maximum loan amount on an FHA for this area is $414,000. So, I mean, I think that's it. VA are for your veterans. There is a the unique thing about VA, if you have anyone that can go VA, is that there's no monthly mortgage insurance, which can be a huge savings for veterans, and it's zero down payment. And again, sellers can still pay closing cost. On a conventional loan product, which is one of our easier products to move along, now all of these are following Fannie Mae and Freddie Mac guidelines, but on a conventional loan, we have a program called a Home Possible that will allow as little as a 3% down payment. Typically, you're going to look at a 5% as a minimum, but we can do as little as a 3% down payment. Again, anything over 20%, you will over 20%, you will avoid the monthly mortgage insurance. So just kind of keep that in mind, because that can up the payment, and mortgage insurance is really driven by the amount of the loan and what their down payment is. So the lesser the down payment, the higher the mortgage insurance is going to be. Obviously, makes sense, right?
Okay.
USDA we really don't see a lot of down here. I mean, that's mostly for rural properties, and But around here, there are some areas and some neighborhoods that are considered USDA qualifying. The problem is with USDA is that there are income limits on that, and a lot of folks are overqualified as far as their income goes for being able to purchase a USDA. Especially with our market as hot as it is right now, and with property values as high as they are, it's just kind of hard to get somebody in a USDA product, but that is something that we could look at. And then of course we have jumbo product. Anyone that's looking, for anything over that 5, 10, 400. So, does that help?
Mm-hmm. Yes.
And then for VA loans, are they only able to have one VA loan for?
Yes,
Okay, that's what I thought.
that is correct. Yes. And then we'll look, because once they sell, we'll have to go back and look at their entitlement for the next purchase. But it's usually not a problem. It just depends. So we'll talk real quick about the do's and the don'ts, because this is kind of important, I thought. We run into this a lot. So important things, to tell your folks up front is, pay your bills on time. Keep track of all your deposits. We really don't want to see any big cash deposits that can't be sourced. We have to source every deposit that goes in there, so into their accounts. So if if we get a pay stub and we get a verification of their pay, and then we see a deposit that doesn't match up to that, we're kind of gonna want to need to know where that came from. So just, be sure they're watching for large deposits. Get their documents together, their W-2s, tax returns, pay stubs, bank statements, those kinds of things we'll need to have. And the biggest thing, y'all, you certainly don't want to put anybody in your car that you haven't had sit down and talk to us or someone else to get pre-approved before you're riding them around and wasting your time and burning your gas. So probably the biggest do up front is get pre-approved. Don'ts. Don't apply for new credit. It's not a time to go out and buy furniture at Rooms to Go and put it on the 12-month no interest plan. Not the time to do that when you're looking to buy a house, okay? Again, large deposits. Watch those deposits. Change jobs. You'd be surprised how many people decide when they're under contract that they want to go out on their own now and start their own business. Not a good idea. Wait, that needs to be put on the back burner for years down the road. Get the house first. So no changing jobs. Ideally, if you could have all your debt out there, if you could keep it within a 20% limit of what it is, that would be ideal to keep your credit score up as well. And again, the large purchases, appliances, furniture, cars, those kinds of things, just put that off. Get the house first. And just be cautious about debt consolidation or any of these things to improve your credit. Like if you have a question about stuff like that, or you have a borrower that has a question, or a potential buyer that has a question about, I'm not sure how my credit is, so I was thinking I would call these people. They're supposed to help me get my credit score up. Please feel free to call us first and let us talk to them. We don't have to pull their credit. Usually just by having a conversation with them for 15 minutes, we can pretty much figure out what they need to do, in order to get themselves ready to purchase a home. And in the event that they think they're ready, when we pull the credit and we see a problem, maybe the credit score is just not quite where it needs to be, we do have ways to try to help them get their credit score up where they can get a better interest rate. So just something to think
What's
about.
the lowest credit score that you work with where they can get into a loan?
Ideally, 640.
Is the lowest?
Yeah,
Okay.
yeah.
So if
I mean,
somebody's
we can
at like,
help
if
build
somebody,
that.
yeah, if somebody's at like 550, so I have someone call me, she's at 550, and she's working, she's like, I know I'll be able to get that up, paying my credit cards off, so if she feels that she'll be able to do that in 6 months, will that,
Sometimes it's not necessarily paying the credit cards off. Again, this is where it would be good for her to talk to us and let us figure out what's going to be in her best interest. Because you don't necessarily want to pay them off. You want to keep a little bit of a balance, but show that you're making your payments
Regular
and
payments.
get that debt down. So, and sometimes there's medical stuff on there. Occasionally we'll see that kind of stuff, and folks forget about it. They have a medical collection that they forgot about, and that's normal. But those kinds of things come up, and we have to just kind of educate people and hold their hand and walk them through the process of getting that score up. We do have a credit specialist, so we can go to him and just kind of run things through him, and he can help us with the ABCs of what to do to get from 550 to 640 or whatever it might be that we need them to be at. So fortunate in that regard. So the only other thing the other thing I'll talk about are down payment assistance programs. That's a big thing right now. South Carolina Housing has opened back up their South Carolina State Housing Loan. Palmetto, the Palmetto Heroes program is still closed, but we do have South Carolina State Housing, which has a 0% second to help with down payment, and and where was I going with that? Hold on a minute. Anyhow, so South Carolina State Housing is one. We also partner with the Federal Home Loan Bank out of Atlanta, which also has a program for down payment assistance. And again, in both of these scenarios, the sellers can still pay closing costs. That's what I was trying to say. But the sellers can still pay the closing costs. But with the Palmetto Heroes, they do require, or with the community, there's community partners in a first-time homebuyers product through FHLB, which is the Federal Home Loan Bank, which is out of Atlanta. Anyhow, they offer up to $7,500 down payment assistance for first-time homebuyers, and up to $10,000 for what's considered their community partners, which is current or retired law enforcement officers, educators, firefighters, healthcare workers, other first responders, veterans, active duty members of the military, and any COVID-related essential workers. So they just upped that to $10,000 this year. However, the FHLB funds are starting to kind of go down. So if you have anybody that you think that might be a good program for them, get with us as soon as you can so we can look at it and see if that's something we can put them in and reserve those funds.
What's the criteria to get into either one of those?
It's first-time home buyer on the one side, and then the other is your healthcare workers, first responders, police.
Do they have to have a minimum credit score?
Well, they will. They'll have to meet other guidelines. But if they meet those guidelines, this is their down payment assistance kind of outlet.
I would love to get some kind of pamphlet on that, knowing the guidelines and everything to be able to send people.
The flyer's here, so you can
Okay.
go on the website and read a little more about it.
Okay, great.
So it's FHLB out of Atlanta. So anyhow,
just a quick question, like going back to, not switching jobs, what length of time should somebody be at their current place?
we would love to see 2 years.
That's what I thought.
However, if they've been in school and they just graduated and they're working in the field that they've been in school for, we can count that. So.
What about people like real estate agents who it's hard to, nail down a paycheck?
Right, that is
Regular
difficult.
paycheck.
Any of your considered self-employed, basically. So self-employment is a big deal right now, just because it's it's always been a big deal. I don't know why I say right now, but, you know, and I get it. You know, I did what y'all did for 20-something years. You know, you want to write off as much as you can and pay as little as you can. And we do have a lot of expenses in the real estate business. So I get that. And, but that goes for every self-employed, person. So, we just need to, you know, we have to get tax returns, we have to get their schedules, we have to see those K-1s, and, you know, we just have to qualify them based on that, so.
So what about people moving here? Do you just look at where they were? So if they're moving here, starting a new job here, you look at their history
Employment contract,
from.
yeah,
Okay.
we'll need to see a copy of their employment contract. A lot of times the employers they'll have a letter that states that, you know, this is your employment contract, you're gonna be paid X amount of money for, you know, annually. So as long as we have that in the file, it's fine. As long as it's not a totally different position than what they had before, you know.
Right.
Typically when we see that, we see folks that are moving here from another state, working with the same company. But it's not uncommon nowadays, y'all, to really see someone that has always wanted to live down here, but they were in Maryland, and they're like, look, I can work anywhere now. I'm remote, so I'm moving to South Carolina. So it's perfectly fine. They're with the same employer. They're just, you know, they're going to be working remotely now. So nothing really changes in that scenario. Does that make sense?
Yeah, it does.
Okay. All right. So lastly, I'll talk real quick about something that our company offers that I think is really unique, and it's called our Priority Approval Program. So it's really important, I think, for real estate agents, because if you talk to somebody, and believe me, I know, somebody calls you on the phone, you got the sign in the yard, and they're like, I want to see this house, and you drive over there like a crazy person, because you're like, I gotta get him in, my seller's driving me crazy. You get them in the door, and they're like, wow, this place is really great. We want to make an offer. Okay, well, have you been pre-qualified, or have you talked to a lender? And well, no, you know, and so it's not, you know, you can ask questions, but honestly, the best thing to do is just get them in touch with someone as soon as you can to find out what they're actually going to be able to do. So before you get to that point, if you're ever in a position to where, you know, you meet someone and they're like, well, we're just starting to think about looking, we've been renting and whatever. Tell you what, talk to Suzanne or talk to Beth, and let them go ahead and get you approved. So what we do is we go ahead and actually take the application, we get their income, we get their tax returns, their bank statements, everything. We send all of that in, and it gets looked at an underwriter within 24 hours. So we can have a letter back to you guys. So especially right now, as hot as the market is, you know, if you're going into a multiple offer situation and you have an approval letter that says, we've looked at credit, we've looked at pay stubs, we've looked at tax returns, all of this stuff looks great, they're approved. It'll be based on appraisal, title, that kind of stuff. That goes a long way for you guys in competing in these multiple offer situations. And just for your peace of mind, I mean, you certainly don't want to be meeting up with people that you don't know what they can do. So just something to kind of keep in the back of your mind. If you have somebody and you're fortunate enough to be able to be in the position to put them in front of us before you start looking, that's a very powerful tool that we're able to offer. So just kind of keep that in mind.
And then would you suggest that people talk to a couple different mortgage lenders? Or
Sure, there's nothing wrong with it. I mean, a mortgage inquiry is totally different than a credit inquiry. So, I mean, it's not going to hurt their credit for them. Now, if they go shop 14 different people,
right,
you know, but if they're just looking to get a second or a third opinion, there's no problem with that at all. Yeah,
okay,
100%. But, you know, just be sure that your folks are comparing their apples to their apples. So they need to be sure they're getting a good faith estimate or some type of a fee schedule of what's gonna be charged to them. Obviously, third-party fees, we just kinda have to guesstimate at. We don't know taxes, we don't know insurance. We guesstimate at what attorney fees are gonna be. They're pretty standard in this area, but those are things that obviously we wouldn't know. But you know, you wanna look at not only what your interest rate's gonna be, but what's the annual percentage rate gonna be, like the APR over the life of the loan, because that's gonna factor in all of the fees that they're gonna pay to get the loan.
So that's what the fees are based on at that point in time? Okay.
Yep. So, what else you got for me?
Good morning.
Good morning.
Yeah, but hi, how are you?
I'm good. How are you?
Good, thanks. Quick question I have, and I think I know the answer, but wanted to run it past you. I have clients that are, just because of their unique situation, they're not able to list until a little closer to summer. And so they're moving out of state. I think they're the only people moving north. But more power to them. And so anyway, she was dealing with her mortgage lender up in the Vermont area, and she kind of hinted to her that because interest rates are going up a little bit, that they may want to consider listing their house down here sooner because of the influx of buyers. And I just reassured her, like, our inventory is so low, I really don't foresee them having a problem. Even though mortgage rates are projected to go up a little bit, they're still going to be reasonable.
Right.
And I just wanted to get your thoughts on that, if you still feel like in the next couple of months we're still going to be in good shape because inventory is so low here.
Yeah, 100%. I don't see things jumping up into the 4.5% and 5% again. I mean, yes, they're going to creep up. Again, everyone is so spoiled right now because for the past year, you know, everybody's been looking at the really low 3s and folks, you know, talking about getting down into the 2s on a 15-year. So I think that's probably the biggest thing, you know, and the media doesn't help.
Sure, right. No, they like us to be a little bit of
right? Yeah. Shock. But no, it'll be fine.
Okay, so you don't foresee them going above 4.5, like anywer in that range?
Honestly, I can't predict it, but it
Sure.
would. I would be surprised if that happened. Okay.
Yeah, okay. I told her we don't have a crystal ball, but I think you're in good shape.
Right. Yeah.
So,
Yeah.
okay.
I don't think it's going to be anything that would push them out of being able to purchase up there.
But they were just concerned about people wanting to buy their home down here right now as opposed to a couple months down the road. And I don't foresee that being an issue because of our inventory situation.
Yeah.
But
I don't think the increase in the interest rate is going to push anyone out of qualifying ratios.
okay.
Does that make sense?
Yep, that's exactly what I needed.
Okay.
Thank you very much. I appreciate
Good.
it.
You're welcome.
Are you doing everything virtual or do you have in person?
We do both.
Okay.
We do both. So, but a lot of what we do is all electronic. We do have some disclosures that go out that have to be printed, signed, and scanned back in. But, you know, obviously we work with populations of people that are not tech savvy and they don't even know how to work a printer. So we do have to actually meet with people in the office and hand sign all of the loan documents, and that's fine. We also, you know, we can FedEx them out to folks and put a shipping label in there for them to FedEx them back. So we've had to do that before too with folks that are out of state that again just don't have the ability or the patience to deal with technology. So it's fine. We'll figure out a way. Where there's a will, there's a way.
That's right.
We'll make it work. So, all right. Anything else? I think I tried to capture everything, but there's some flyers here for y'all. There's some booklets that are really good for you to give your buyers. It's got a lot of information in there, and there's just some goodies. So swing by, and I've got cards here, you guys. Michael, I don't know if you have my number up on there, but if anyone has a question, I mean, please reach out to me. I don't mind. I always answer my phone. If I don't, it's only because I'm on the other line. So you can always reach me, and I'm glad to help with any questions y'all have. So thanks for having me
Oh, we
today.
appreciate you coming in.
Thank y'all for
very
being
much.
here.
This has been great.
This is great. Have a good Friday, everybody, and a great weekend. Thank you.